Okay, welcome back to my channel. In this video, we want to look at the preparation of the trading account, whereby we are going to calculate an insurance claim. So, according to our question, we are going to look at question 4.2. So, our question 4.2 reads, when Miss Smith unlocked a shop on 17 March 2020, she found that all her inventory, except inventory to the value of 7,850 rands, had been stolen during the night. From her financial records, the following was found. So you just need to go through the information that you are given, and then on the required part, Mrs. Smith requested you to calculate a claim to be submitted to the insurance company. The inventory was fully insured, so our question has got 18 marks. So the last statement that we have is the inventory was fully insured, meaning the total amount of stock loss is going to be the claim that is going to be made. So basically, that's what we have. Then, given now the calculation of our stock loss according to information given, we are going to come up with the formula that we are going to employ, whereby we are going to say our inventory loss or our stock loss, we can say stock loss. So this is what we have in terms of the formula for calculating our stock loss, whereby we are going to say closing inventory minus salvage. So obviously, the closing inventory now, we are going to open a T account, that is the trading account, and we're going to find closing inventory as a balanced figure. And then the salvage, we are given it in the question. So salvage basically is the stock that is remaining after the loss. So if you go there, you see that we are told that she found that all her inventory, except inventory the value of 7,850 rands, he had been stolen during the night. So it means this inventory that is remaining becomes the salvage. So basically, this is our salvage. So task that we have now is to find out about the closing inventory. So we are going to open a T account. So this is our T account, whereby we are going to have our opening inventory on the debit side. We are also going to have our purchases on the debit side, and then our gross profit also on the debit side. The credit side, we are going to have our sales and closing inventory. And if we have got our purchase returns, they will be also on the credit side. Our purchase returns will be on the credit side. Then the sales returns, if they are there, they should appear on the debit side. So we can start with the figure for our opening inventory. Where we can find out about open inventory. So if you come here, you are told that inventory on 31 December 20 financial period was 63,700 rands. So obviously, this is going to be our opening inventory, 63,700. So the figure for purchases, if you come here, you are told that the purchases for the period are up to 31 months. So we have 610,300, of which inventory of 10,300 is going to be our purchase returns, and they go to the credit side. Purchase returns to the credit side, then our purchases to the debit side. Profits are here on the debit side, of which are the figure for gross profit. We are going to calculate it and bring it here. Side whereby we have our sales. So if you refer back, you see that our sales, we are given it here, whereby it reads sales on 17 March 2020 amounted to 860,000 rands. So we have 860,000 as the total for our sales. And remember, the closing inventory should be on the credit side. So we are also going to find that figure as a balancing figure. Then from there, we can now be able to put our double lines. So basically, this is what we have. And then we can leave it for now as we try to calculate the gross profit. So we are also going to employ the formula for calculating our gross profit is total gross profit. Total gross profit is equal to is supposed to be equal to gross profit on normal sales. For your total gross profit, whereby you're going to say your gross profit on normal sales, you add gross profit on staff sales, and then you also add gross profit on sale basis. So depending on the question, whether you have staff sales or whether you have a sale basis, it will depend on the question. So let's try to see according to our question. You'd see that you come here, you'd see that you are told that she sold on this sentence, she sold inventory to a staff at cost plus 10% to the value of 36,350 rands. So basically that's what we have. So it means we have got a staff sales of this figure. So to get the normal sales, we are going to say the total sales minus the staff sales. So basically what it means is our staff sales of 36,350 rands is inside our 860,000. So we want to see the normal sales after removing the staff sales. So you'd see that we do not have a sale basis whereby we have got sales and that took place on sale basis. So we do not have in this case. So we are only going to have gross profit on normal sales and gross profit on staff sales. So to calculate sales, normal sales, we are going to say total sales, which you are given is 860,000 minus a staff sales 36,350. So this is our normal sales. And the staff sales, so our staff sales are given as 36,350 rands. So basically, this is what we distribution in terms of our sales. So from there, we can now be able to calculate our gross profit inside our normal sales and our staff sales. But basically, we can start with the calculation of normal sales. Gross profit for normal sales. So we're saying gross profit. So gross profit on normal sales, remember, we are going to use the representation of our cost price. So we're going to say cost price plus gross profit equals to selling price. So remember, our gross profit is the markup. And we know that our cost price is always 100%. And the gross profit percentage depends on the question. So here, according to our question, what sales is 60%. So we are going to say plus. So if you add 60% to your cost price, which is 100%, you're going to get 160% representing your sales, your selling price. So we then make a simple proportion by saying we now know that our normal sales is 823,650. This is our normal sales. So we are going to say 160 is equals to. So we're going to say 160% is equals to 823,650 rands. And then the figure that we are looking for is the gross profit, which is 60%. Whereby we are going to just use simple proportion, whereby say 1 to F, which is 160. And then we multiply by the given figure. We multiply by the given figure, which is 820,650. So I will calculate it like that. We see that you are going to get your figure to the nearest two decimal places is 308,868 rands 75 cents. So this is going to be your gross profit on normal sales, whereby it's 308,868 rands 75 cents. So from that now, we can now be able to calculate the gross profit on staff sales. whereby if you refer back, you would see that we are told that it sold inventory to a staff at cost plus 10% to the value of 36,350 rands. So basically, this is going to be your selling price. And we are given a markup is 10%, which is our gross profit on 10%. And then we know that the cost price is always 100%. So we refer to our formula again, which says cost price plus gross profit is equals to selling price. So from that now we can now be able to say 100%. And our markup on gross profit we're giving it here is 10% for staff sales. So basically this is the representation that we have in terms of gross profit on staff sales. Then we now make a proportion whereby we know that the staff sales is 36,350. So our 36,350 is equal to 110%. And then the figure that we are looking for is 10%. So we just make our simple calculation by saying what we don't have is 10% over what we have, which is 110, multiplied by the given figure, which is 36,350. So we make that calculation to see that the number that you are going to get, the answer that we get according to two decimal places is going to be 3,304. 3,304 and 55 cents. So we now have our gross profit on staff sales and gross profit on normal sales. So we are going to add the two figures to get the total gross profit. So to get your total, so if you add the two, you're going to get a total of 312,173 rands 30 cents. So basically, this is going to be your total gross profit. So this figure that we have here, we are saying the figure that we have for total gross profits, which is this one, is the same figure that is supposed to come here in our T account as our gross profit. So from there, we cannot be able to balance our account so that we find our closing inventory. So we find our closing inventory as a balancing figure. So if we try to add what we have on the debt side, so we can just try to add. So as we are seeing, the debt side becomes, it will obviously become the greater total. So if you add, you're going to get a total for 996,000 173 rands 30 cents. So from there, we cannot be able to subtract our 996 for the debt side or the credit side, sorry, and then we get our balancing figure as our closing inventory is 125,000 873 rands 30 cents. So basically, this becomes your closing inventory. So from there, you can now be able to calculate the inventory loss by using this formula that we have here of saying stock loss is equal to closing inventory minus salvage. So we now have our closing inventory. So it's going to be equal to 125,873 rand, 30 cents, and then subtract the salvage. And our salvage, we are given it here is the remaining inventory after the theft, which is 7,850. Then subtract, you're going to get your answer is 118,023 rands 36. So this is going to be your claim of stock loss, 118,023 rands 36. So basically, this is what we have, guys, according to this video. And thank you for listening. Hopefully, the video was helpful. And let's meet again in the next video. And don't forget to subscribe and share.